We have Airbnb now. We're traveling all over. I typically will get a text. This happened, that happened. I'm just on the chain. They checked in. This one checked out. The place is clean. You know, we just get updates now.
They hurt so much that they have to. They see so much that they're inspired to. They learn so much that they want to. And they're given so much that they're able to.
Right. And it's been about 2 years, so our 2-year journey of dissecting all this and talking to a lot of people. We joined hotel associations, we talked to hoteliers, we talked to the employees.
I love it.
So now that we've done this, we've collected all our information, we're ready.
Okay. Welcome to Black Wealth Weekly Podcast, where you can find different guests being interviewed by me, Shaniqua Nicole, the Millennial Money Maven, every single week, where we will be breaking down how they got into their respective industries and are creating wealth for their families. You don't want to miss an episode, so hit the bell and tune in. What's up, family? Welcome to this week's episode of Black Wealth Weekly. I'm your host, Shaniqua Nicole, the Millennial Money Maven, and you guys know I bring you the hottest entrepreneurs that are out here killing the game in their own financial journey so that we can inspire you to find your way to wealth. And this week it is no different. Please meet my amazing guests. What's up, family? How are you guys doing?
Hello, wonderful, wonderful.
We are so excited and happy to be here. Thank you for having us.
Yes,
we're excited.
Guys, listen, I'm excited.
Stay excited.
We had some behind the scenes conversation going on, and y'all, the conversation is already feeling very rich. So please introduce yourself to the audience and let them know who you are and what you guys do.
Rod and Jen Spratley here, guys. We're the power couple and property prosperity, molding and shaping real estate millionaires and crafting legacy portfolios.
That's what we do. That's who we are. We've been doing it for 3 decades. So we've been at the game for a long time. Now we'll give you a little background. Background is we were just having this conversation about internet and social media and all that. Obviously, we predate all that. You know, but been in business a long time. Started out really, and my background before we met was construction.
Okay.
I was one of the first African-American business owners in the Washington, D.C. market to really work into doing government contracting. Worked at, you know, NIH, NASA, did a lot of government stuff. Built a company, was 8A certified, MBLC certified, carried all those credentials and kind of cut my teeth in that government market years ago. And then kind of left that and went into the real estate market, building, you know, $1 million houses and doing all that, just short of us meeting about 24 years ago. And Jim was in real estate and corporate doing some things kind of combined. And then we kind of came together and just made this kind of power team. And we started investing and buying real estate and commercial property, residential property, buying land, doing subdivisions, building houses.
Wow.
And that's kind of just the backstory. Yeah.
Couple.
Yeah.
Power
That's
team.
how it worked.
I love that.
Yeah.
So, okay, so your career spans over 30 years.
Absolutely.
So we have a lot that we could talk about.
No doubt. No doubt. We do.
We have a lot that we could talk about. All right.
Yeah.
So first off, you were the first black, one of the first. So you
one of a small group. Yeah.
A small group.
Yeah.
That pioneered your way into government contracting as a construction.
I did construction, general contractor.
Gotcha. And so what were those contracts like when you were in that market at the time?
It was interesting because when I first got in, you know, one of my biggest pushes was to get the credentials.
Okay.
You know, it's push. Finally got certified, got the MBLC and all these minority certifications, got an 8A certification, which back then was fairly difficult to get, you know, but was successful and got that, and then was able to get in and start doing some actual proposals for set-aside projects. So did some work for NIH, Department of Agriculture, worked on, you know, DC Public Schools, worked for, you know, DC Government. So started doing a lot of contracts around that. And, you know, really just kind of got an opportunity to meet a lot of good people that then kind of helped and supported and promoted me as a young entrepreneur, African American in the industry. You know, having a Class A general contractor's license, which was pretty significant in our state because, and as in most states, because I was state licensed, but in most states the requirement for you to really build any construction is to be a Class A, which is that's high rise all the way down to building a doghouse. So
I'm actually working on my construction license here.
Yeah, good.
Yes.
I was don't carry it anymore in Georgia. We did that for a while.
Okay.
But was licensed here as well. And,
Gotcha.
and you start holding all these licenses if you're not working. But
Yeah.
that's I definitely recommend you do that.
So the contracts that you were getting from the government, how much was your first contract?
I think the first one I got was probably probably 140,000.
140,000
Yeah,
to do
something
what
like
kind
that.
of work?
I actually, believe it or not, I built a house.
To build a house?
Yeah.
A government house?
I
What
actually
kind of
built a
house?
house. Well, the Department of Agriculture actually hires scientists and different people to live actually on the property up in Beltsville.
Okay.
And they have a farm there.
Gotcha.
And so the requirement was to build a small
They need a
quarters,
house for them
for them to live in when they were actually there doing whatever they did during that season.
Now, $110,000 to build a house these days?
Oh, no, you couldn't touch it. That's what I said. So now that tells you how long ago.
That's why we love real estate.
Right, right.
Now that house now is probably worth 400, maybe 6.
Probably.
Gotcha. And it cost you how much to build?
Well, I think back during that time, I want to say it was probably about a 30% margin on that because it was kind of tight.
Okay.
Probably right under.
They
about
weren't giving
80,
you a lot of
probably
money.
about 80.
So you were
85,000.
doing it to like build a relationship.
Yeah.
So
we were doing it to
during
get
your
in.
tenure in that time, you were doing government contracting. What was your biggest contract?
Probably about 700,000.
700.
Yeah.
And what kind of work did that require for you?
Interior work. I did a lot of drywall, painting, acoustical ceiling, floor tile. Worked at the Pentagon. Did some work there doing floor tile, putting in doors, things like that. So a lot of that, a lot of interior finish work.
Gotcha.
And then, once you get that, you get a lot of larger contractors that would subcontract because you have the certifications and they need to meet their requirements too. So, it was a good experience as a business, a young business, for me to grow my business up, to be able to hire employees and bring people on and get an office. So, and really was instrumental in helping us even do what we do now.
Right. So would you recommend today, if someone's new starting construction, that they go that route of seeking government contracts?
It depends. I think it depends on what their discipline is because a lot of contractors like to specialize.
Yeah.
Like now, because we still do the work, I've got contractors that all they do is flooring. Mm-hmm. I've got contractors that all they do is paint.
Right.
I've got contractors that all they do is roofing.
Yep.
In that era, during that time, we actually did a lot of the trades. I had people that worked for me that did,
So on your own payroll?
Yeah,
You
absolutely.
weren't like subbing out?
Oh, no, we had on our payroll, and we had subcontractors as well.
Yeah.
Yeah, but we had people on payroll working directly for us. So, I think that experience from a business perspective did help, like I said, that kind of led us into when we got together and started doing work. It was really a good foundation for just doing business.
Okay.
Yeah, and then we just built off of that.
Gotcha. I love that.
Yeah.
So, Queen, tell us about when you guys got together.
Ooh. It was magical. No, it really was because Rod did have that background. I came more from the corporate side.
Okay.
And so while he was doing that, I was working on education and getting my master's degree and worked for real estate developers at the time, didn't know him, and worked for other corporations where I gained a lot of experience on leadership and just how to run companies and that kind of thing. And so when we got together, it was just such a good marriage because of his background and my background and both of our drive and desire to succeed. Him being an entrepreneur, I'm having the aspirations to be an entrepreneur, but more of a corporate background. I dabbled in some entrepreneurship a little bit with some smaller things. Actually created a line of skincare products. Was actually in the stores here in Atlanta.
Yeah,
Okay.
Yeah,
I had
Well,
it in
I
Whole
mean, your
Foods.
skin is beautiful,
Well, thank
so
you. I
I'm sure you
appreciate
got
it.
some secrets to share.
Got a couple little nuggets I'd like to share with you. So I did that. Rod was very supportive, and we were married at this point and had children and all this stuff. But that's pretty much how we got together. We were just on the same accord.
Yeah.
Same
and you had
drive.
children individually?
We did,
did.
and then together. Yeah, we blended family.
I had two, he had one, and then we have one together. So we had the whole blended family thing going on. Second marriage, all those things that would point to not succeeding.
Right.
And we beat the odds.
Wow, I
And
love
been
that.
married for
so
how
was
long
both
we've been
of you
married?
guys' second marriage?
Yes.
23
Yes.
years. Been
Gotcha.
together 24, been married 23.
23 years, yeah.
So you married after just 1 year together?
Yeah.
Yeah, I think it was
Yeah.
just about 1 year together.
Yeah, absolutely
We
was.
knew what we wanted. We saw each other.
Yeah.
We're like,
I was like,
it.
that's my lady. I was like, I wasn't planning it. I saw her. I was like, no. I actually did some work for her.
Okay.
So she had
I did some work for him. He said he was plotting on you.
she had a townhouse.
I purchased a townhouse.
She purchased a townhouse,
Yeah.
and of course I went in and renovated, and I threw in some extra. I was like fixing some extra
He did.
stuff, and
He did. He
making
did.
it look real good.
Right.
You know?
He did.
Yeah.
He did, and then we started investing
Yeah.
together.
Okay.
I got my real estate license, and now I have a brokerage. We have a brokerage together.
Yeah.
But we noticed that we had that common thread, and it was
yeah, no
property,
doubt.
it was real estate, it was development. And so we married those two things together and just built off of that. And
I love
it's been
it.
really good.
Yeah.
Tell me a little bit about what your business looks like today.
Oh gosh, there's so many things going on. So we do have a real estate brokerage.
And a
We
construction
have a
company
construction
still, yeah.
company. We have property that we have a management company that manages our properties.
Okay.
That includes short-term rental, mid-term rental, long-term rental,
Some
multi-unit,
commercial.
some commercial. So that's the core of our business.
How many doors?
So here's what we typically like to do, because we used to really get into this whole the count. And one of the things we realized is our biggest goal for people is to encourage them to get in and not set a goal of a total amount.
Okay.
Now,
Of doors.
of doors. Now we have multi-unit buildings, single-family buildings. We have rooming houses. We have short-term rentals, and we're in midterm, and we're in the process of purchasing a hotel. So since door counts change with the different things,
Yes.
we try not to cloud. But what we do tell you is we have a multi-million-dollar portfolio
Yes.
that cash flows extremely well.
All right,
And-
so I'm trying to figure out what my next goal should be as far as my real estate portfolio. And I have this number in my mind.
Right.
We
okay.
always have these numbers. I want to be
Sure.
married by 30.
Yeah, yeah,
Okay.
I
yeah.
want to make $100,000.
Yeah.
Right, we
right.
have these goals.
Yeah.
So
Right.
I was thinking that maybe a $20 million portfolio would be a nice portfolio. So what, when you're in the real estate business, and as far as you guys know how you've been building your portfolio, what would you say is a good goal? If you're
Right.
not talking doors, what's a good goal from an asset perspective?
That's a good question. I like
I
that.
think
Yeah.
that's the beautiful part about real estate, Shaniqua, is that it's so flexible.
Yeah.
And it's so flexible that one person might say, you know what, I have a retirement that's going to be coming in after I work 40 years on this job, and I really only need 3 properties to bring me that extra $3,000-4,000 a month to supplement my retirement. Somebody else might say, I want to quit my job altogether, and I want to be a real estate mogul. Right?
Yeah,
I want
no
a
stopping,
$50
no
million
limit.
portfolio.
Yeah.
So it's really just that unique. You
Yeah.
know, to each person. Each person's goal. And this is what we teach people is like, what Rod and I are doing is for us, and what you might need is very different. But real estate is that one asset that is that flexible, right?
Right.
If you think of the
Right.
4 asset classes where you can build wealth from, being businesses, real estate, stocks and bonds, and commodities, those are really the only 4 assets that you can build wealth from. If you pick real estate, you've got that flexibility. And we always say anybody can do it. It's attainable, it's sustainable, it's transferable, it's scalable. And anyone without any sort of education
Yeah.
can buy a property,
Yeah.
right?
Yeah.
Somebody
No doubt.
else, like I said,
Yep.
can do any and everything with it.
Be
So,
18 years old and just
100%.
have a desire to get it. You can purchase legally.
but
So-
certainly if you need real estate to last you for the rest of your lifetime, then you need to figure out how much money you need to sustain yourself until you're gone.
Okay.
And that you want to pass down.
Right.
And that's what you should build toward. That's what your goal should be.
Okay.
And that's the portfolio. And you can. You
Yeah,
know,
and
it's
one,
just that
and
you
one of the
can do
things
it.
that we did, now, and see, and that's why we try to be careful, because we like to help people build what they desire.
Yeah.
Because, we don't want to do what we did. We'll tell you how to do what we
Yeah.
did, but we
Right.
want you to build what you want.
Right.
And the thing for us was, one of the most important things, and a lot of this came from just, again, childhood, lifestyle, the way we grew up, the way I grew up, not having a lot. The goal was to kind of break a generational curse. So for me, it was like the motivation was build wealth, and not wealth that just can be gone tomorrow. I mean, build wealth that's sustainable, that stays, okay, and then have that wealth, the money generate money.
Right.
So it's like passive income for us. The goal was, we don't want to have to work, which we don't now, if we don't want to. We do what we want to do.
Right.
We've been in 4 states in the last, 3 weeks?
Yeah,
Because we do a lot of moving around,
Yeah.
traveling around.
I love that.
We usually look at property wherever we go.
All the
Okay.
time.
because we're That's what we do.
All the
So
time.
we're 24/7 property hunting. And of course, 24/7 property hunting, since what we do is real estate, is also tax deductible.
Mm-hmm.
So
all the travel is tax deductible.
Yes, ma'am.
Yeah.
Y'all talk to
Yes,
us now.
okay. So-
Tell us how to turn. Listen, I'm an accountant by trade,
Yeah.
so I don't know if you
Nice.
guys
I
know that,
love it.
but
No, I didn't
So-
know
this
that.
is
I
how you
love
turn your
accountants.
lifestyle
100%.
into 100% tax deduction.
So
ma'am.
when
I
you
love
see
it.
us on YouTube or our channel or anywhere else, you'll always see us say, we're looking at property today, which we do.
Right.
So we were just in Miami. What did we look at? A hotel.
So powerful.
So,
Yeah.
and we didn't go just to say, oh, we want to go to Miami. We legitimately went to actually look at a hotel.
Yeah.
Okay,
So tell us about this
yeah.
hotel. So you guys have been doing real estate for 30 years.
Mm-hmm.
You started single family, you got short-term rentals, you got boarding homes, you got all the things. Now you're looking at hotels.
Mm-hmm.
So this is a beautiful ascension when it comes to being a real estate investor. Tell us a little bit about the hotel deal, why you chose it, why you're looking at it, and what you think it might do for you and your portfolio.
Such a good question.
Yeah.
I love your
Yeah.
questions. They're so good.
Yeah.
For us, we do feel like it's the natural next step.
Okay.
Right? 'Cause you remember you played Monopoly, right, when you were a kid, and you bought 3 greenhouses or whatever, and then the next thing was to get a hotel. We don't do it because of that, but
Yeah.
it's another asset class within real estate. But it is very different, though, Shaniqua, and this
Oh,
is
yeah.
what we've been doing. We've been studying it because we don't do anything unless we get the education behind it.
Okay.
We don't encourage anybody to do
Right.
that. Make sure you understand this asset and you get the education so
No
that
doubt.
you know what's going on and you can't just turn it over to somebody else who loses everything for you. So what we have found it to be, it's very complex, right? So it's an operation, it's a business in real estate or on real estate. So sort of two things going on.
Right.
And if you don't have that business acumen where you can have a staff that's 24/7, this is a 24/7 operation.
yeah.
This is not like we close at 5 o'clock and everybody go
365, they
home.
never
Right.
close.
It's 24/7. You can
Yeah,
always get a
hotels never
hotel
close.
room on any
Any
day of the
day.
Yeah,
week,
they're
right?
open
Wow.
all the time.
And
Yeah.
so, rates are constantly changing because you can. But that's the beautiful part about it, too. The cash flow is a little bit different because we're talking daily cash flow,
Yeah.
but it's capital intensive. It's very different from us going and buying a duplex or a triplex or an 8-unit building. We're talking millions and millions of dollars.
Yeah.
A lot of people partner together to bring the equity together to be able to acquire and purchase a hotel. But you can buy it. That's the cool
yeah.
thing. And most people don't know that you can. You
Yeah.
can actually buy a hotel. But you need to understand how the operation runs, and you need to know more than just standard, business operations. It's a 24/7 operation on a piece of real estate that runs 24/7 with all kinds of moving parts.
Yeah, and
You
so
gotta know.
what makes you
Yeah.
most interested in wanting to get a hotel instead of just growing your multifamily portfolio?
The cash flow, I'm going to let you talk to
Yeah,
this too,
yeah.
but
Well, two things.
and the tax advantages.
Well, let's and we will clarify, because we should say this, and you have this background,
Yeah.
and you know this. So we always make sure that we tell people we're not accountants,
Right.
and we're not tax attorneys. What we do is we have those people as part of our group.
They're smarter than we are.
They're in those areas. They've helped us immensely.
Yeah.
So we always say to people, you have to have a team. So our team does include, we do have a CPA and a tax advisor and an attorney, a real estate attorney, as well as an attorney that just happens to do a myriad of other things. So we use them as advisors on the things that we do. We have people that we use to do engineering services, architectural services. So you name it, we have someone that we go to. And we've assembled that team over the last 20-something years.
Right.
Some of them we've known a long time. The beauty for us is we bring all these people together. We mastermind, we ask questions like you.
We're like you.
and we dig into all the details. So the reason we ended up in Miami was not to actually purchase that hotel, but it was an owner that recently purchased that was willing to pull back the curtain and let us see everything. And we wanted to see.
Are they black?
No, he's not.
Okay.
He's actually Greek.
Okay.
But this was a black meeting that we went to.
Yeah, but the meeting was
Yeah.
a group of black
African-American
African-American investors.
Okay.
But this gentleman, great guy, allowed us to see the basement and the laundry room and how they wash the dishes. See, we're interested in knowing what makes the machine
The
work.
business.
I want to know,
Yeah.
Right.
So-
You're a real estate professional, but not
Yeah.
hotel.
Yeah.
Yes.
So,
Yes,
so for
exactly.
us, it was critical because in And it's been about 2 years, so our 2-year journey of dissecting all this and talking to a lot of people. We joined hotel associations, we talked to hoteliers, we talked to the employees.
I love it.
So now that we've done this, we've collected all our information, we're ready.
Okay.
We're cranking numbers now.
So are you going to raise money to get into this deal?
That's a very good question, because that happens a lot. But
Yeah.
then you have to be careful with that too, right? Because you're handling other people's money.
Yeah.
And I take that very seriously. And
Oh
so does Rod.
me too.
But I should clarify though something about what I was about to say, why it was so appealing to us.
Okay.
Now, we have different angles that we look at every piece of property. A hotel comes with an enormous amount of tax, just advantages.
Let's talk about it.
You know, cost segregation, depreciation, and as you know, I mean, obviously, for properties that are short-term rental or hotels, there's a lot more benefits, especially even for people that's not designated real estate professionals. Now, we happen to be.
Right.
But if you're not, it just brings you just right out the gate an enormous amount of write-off that can pass over to your W-2 income or other employment or business income. And that's just, look, that's what the wealthy do.
Right.
So they look for places to offset, because the primary goal for most affluent, very wealthy people is they're very, very keen on strategizing for their taxes.
Ways to keep your money.
Ways to keep your money.
So that's what, so we
100%.
follow the trail. That's what we've done for years. And that trail leads to, hotels are great for that.
Okay.
And they do cash flow very well daily.
Right.
You know,
how do you guys feel about farms? You know, farms is a great way. Great for taxes. Yeah.
Oh, we actually had one.
Yeah, we
did.
You
had a farm?
We did on a farm, 55 acres. Yep,
wow.
We did on a farm. Used to be a cattle farm.
Okay.
And yeah, we bought that as part of an estate sale. It was one of the properties we own. And we had some different ideas for what we were going to do with it.
Okay.
And we're looking again to do something similar.
We sold it. We
did sell that one, but a lot of, you know, there's been a lot of things happening now. You got solar farms. People are renting their land, leasing, not selling.
Leasing.
For solar, energy,
instead of solar.
wind energy.
100%. You know, you learn these things.
But you have to understand, we're also talking 2.5 decades of investing. So what was popular 25 years ago or today wasn't so much then.
Right.
Yeah.
Now looking back.
Well, you know, the tax code changes every year. So I tell people all the time, you have to, if you are looking to build wealth, if you're looking to save money, invest money, you have to learn what the government wants you to do.
Yeah.
Because they're going to incentivize you. So if you're a real estate investor, nowadays all of our food is coming from China, coming from everywhere else. So they're incentivizing farmers to go out
partner with the government. We say that all the time. And so when you look at the different ways to make money as an employee, self-employed, business, and entrepreneur, the government favors big business and entrepreneurship.
Absolutely.
Or I should say investors, not entrepreneurs, investors. And they do give you those benefits because you're providing them with things that they can't provide. Housing, like you said, food, clothing, whatever that they need for society and all, they will incentivize you, and you we 100% take advantage of it.
And the incredible thing is what we found over all the years of just talking to so many people, and especially our people, African American people, you find out it's the stuff we don't know. It's that lack of education. Or miseducated, misinformed on
knowledge,
something, and then they go and they repeat it, and we're like, where did you get that from?
Well, what are some of the biggest misconceptions that you have learned working with your mentees that people struggle with, you know, when it comes to real estate investing?
Yeah, you know, I'm
going
to hit you with this one right out the gate, and I'm going to tell you the one that I just blows my mind. But the biggest thing we hear, especially in our community, is, I don't want to be a landlord. I don't want to fix toilets, and I don't. Now you've heard it. I know you've heard it. Okay. Now, but here's the thing, and I'm not.
Well, you got to give them the 3 T's.
Okay. Trash, tenants, and toilets.
That's what they don't want.
That's what they don't want.
They trashed my unit. The tenants gave me a problem. They called me all the time. They wrecked my house. The toilet's broken. They called me in the middle of the night. The toilet's clogged. I'm like, but it's such a narrow-minded way to see such a great asset. Now, everything has some. Look, I ran a construction company for years and still do, and to this day I still have challenges. But I know what to do. See, I've done these so many times. They call, hey, this happened, the roof's leaking. Okay, do this.
Right.
Go get that do the tarp it, don't let it, you know.
Yeah, so
there's
now
a
that
system.
you guys are nearing retirement, what does the systems look like in your business that are helping you travel 24/7 when you want to? What do those systems
One of
look
the
like?
beautiful
So
things
many
is
of
just
them.
technology, the advances in technology. Things we used to do where it had to be like a phone call. Oh, I'm going all the way back now. They would page me on a pager.
Not the pager. Oh my God.
And then I would find a payphone because I just got a 911.
On the pager.
Did you hear the payphone?
So
I don't know if you guys were
they don't
around
even
when
exist
payphones were
anymore.
around.
So then
Listen,
I got.
I'm not that young, okay.
So now I'm stuck. I'm stuck on 85. The traffic is bumper to bumper, and I'm getting paid 911, 911. So now I got to get off. Find a payphone that worked, because you know that they didn't always work.
Oh,
wow.
Find a
that's
payphone
so
that worked,
crazy.
and somebody not be on it,
Right.
and wait and make this call just to find out something like, hey, when you come back, can you bring X? I'm like, you 911 me first. So then we, of course, graduated from that to the bag cell phone. I was one of the original holders of a cell phone. It must have been the size of a briefcase. You know, I remember when I first, that had the handle that looked
I
like a
remember
regular
a
house
big
phone.
car phone.
That's what it was.
That's what he's talking about.
Yeah, I had one.
Car
The
phone
battery
and
was bigger than the phone. The
Right.
battery was huge.
And you were so cool if you had
And when
one.
I had that and
Oh my
somebody
God.
called, man, you could answer that, I was like, I have arrived. I am literally like, but, you know, so the advances in technology, and then what's happened now
Rent
is
collection.
our rent collections are automated, maintenance is automated. We have Airbnb now. We're traveling all over. I typically will get a text. This happened, that happened. I'm just on the chain. They checked in. This one checked out. The place is clean. You know, we just get updates now. Now, if there's a problem, it'll come in the same form. We might say, hey, can you call, or this was an issue, and we might have to respond.
Yeah.
But it's so much more automated.
Right.
We have people for the things that we need.
You
They're
gotta
in
have
place.
people.
They know what they need to do.
Yeah.
They have a schedule. They've got a standard operating procedure. Hey, when this one checks out at 10, you do X, Y, and Z.
Right.
You know, so all that stuff has changed,
Right.
and that's made it so much easier.
So what would you say is another misconception that people have? So we talked about the one, they don't want to deal with toilets and
That it's hard.
trash.
Yeah.
What are some misconceptions that people have? I mean, I have a lot of people, you know, I help first-time investors become investors
Oh, wow, okay.
as well. So, you know, how do you help, what are the mindset shifts that you think that people need to make when it comes to them just jumping out the window and getting their first investment? This week's episode is sponsored by ABCs for Rich Kids by 7-year-old author and entrepreneur Bryce Nicholas. Please tell us where we can find your book.
ABCsforRichKids.com.
Awesome. This book is so amazing, guys. It literally goes from A to Z with different financial terms for your little loved ones. Awesome. So we've got F is for future value, E is for evaluation, H is for air. Guys, if you do not have this book, the Amazon #1 bestseller, please go and grab it now at abcsforrichkids.com. So let me tell you guys my story, my first investment property.
Okay.
Y'all gonna call me crazy, but it's
Probably
okay.
not.
Now if you purchase, I'm going to applaud you. If you bought one out, no, I wouldn't do it.
Okay, so
We're like, yay.
let me tell you my first property. Okay, so I influenced by the internet, influenced by Instagram. I saw people investing in Detroit, and I had cash, and I always, you know, so I own my personal home.
Right.
But I wanted to purchase in a market where I could just buy cash.
Right.
And so Detroit looked like a very lucrative market for me. So I literally went online. I found an online auction, hubzoo.com.
Yeah.
I bid on a property and I won.
Woo-hoo.
Never been to Detroit in my life.
Yep.
Did you go, wait, what? I won?
Never been to Detroit in my life. I won the property for 16 grand. So it was just like, I'm either going to learn or lose.
Right.
If I lose, I'm going to learn.
Either way, you're gonna learn.
It's a win, right?
No
Either
doubt.
way, it's a win.
It's just
No
16
doubt.
grand.
So it's just 16 grand. Of
Right.
course, hopefully it's not burned down. You know?
Yeah. crackheads living in it.
Hopefully it's not abandoned, but we'll get there when we get there.
Right.
So that was my first
Wow.
journey. That was my first opportunity to invest in some property that I didn't live in. It was out of state, in a state I had never been in. What's your formula for people going to find their first?
Yeah.
Thank you.
No, but we wouldn't say you were crazy. We'd actually applaud you.
We'd be like, that was amazing.
Yeah.
Listen.
No, I mean,
great.
because you actually.
It really worked out. Like God was all over that
You
deal.
You took action.
Yeah.
I took action.
Yeah.
And that was the scariest part because I had been asking people for years, well, what do you think?
Yeah.
You took action, so that
Well,
definitely
I'll let Jen break down to you our process for how we go about that.
We like to say start small and start local, and learn. It's all about education.
Yeah.
It's not a difficult journey. I think people, when they see real estate, they're like, oh my gosh, I don't even know where to start. It's so complex. It's so much. I don't know. Tenants, toilets, trash. How do I know from the interest rate, and how do I know how much to pay and all this? And they get so overwhelmed. So when we narrow it down for them and say, come up with your strategy, and we teach them the different strategies. There's different, do you want single family? Do you want duplex? Do you want a fourplex? And you can do all those as your first time, as you already know. But try to narrow it down so you're not all over the place, because it can be one of those things where you're like, oh, that looks good. Oh, look what they're doing. Oh, I want to do that. And so if you can narrow your focus, just get that first one as local as you can. If you live in an area that's sort of pricey and you got to go out a little bit,
go out to
you go out just a little bit further.
A little bit.
Yeah, you may have to go out a little bit.
Because any community, and I'll add something onto that, because you got to remember, any metropolitan area that really starts to expand, it goes out to the country.
Yes,
So it'll keep, So just go out just far enough so it's cheaper to get in, but you still can drive and get to it.
Right.
And something that's not in too much of a disrepair, that needs a major renovation, because that's a lot to do as well, right? Especially if you don't know anything about construction and home renovation and all this. And you're like, oh my gosh, it needs all this stuff. It's like a shell, and I have to totally renovate the whole property. That can be overwhelming to a first-time investor. So we say, find something that needs repair. Maybe it needs a new carpet and painting. Maybe
Cosmetics.
Some updates. Cosmetics,
Yeah.
if you can. That's the ideal way to start.
Yeah.
If you can.
Gotcha.
Right.
But hey, if you got to jump out and go and get that thing, and now
And I'll tell you, the house I bought, by the grace of God, it wasn't too bad. I invested $20,000 in the renovation, collected $900 event for 5 years. Yeah. And then I sold it for like $70,000.
Wow,
So
I love that story.
So your first experience actually was a good experience.
It was.
And even for most people that we meet, even when they start telling us these stories like, the tenant did this and the tenant did that, what we found is, because we give you all those systems, including we tell you how to do your tenants, we tell you how to vet the tenants, we tell you what systems to use to vet the tenants. We tell you, don't rent to your friends. Don't rent to Ray Ray and Pookie and them because they needed a house. I'm just being real. I mean, if you love them, help them out, give them a little money. But don't put them in your rental house.
Oh, not in your assets.
Oh,
no. Let them go mess somebody else.
No. If you love them that much, just help them. If you want to bless them a little
and teach
something.
them. Maybe teach them a
little something. And then say, I can't let you stay in my place.
Right.
Because it's business. But I'll give you a little something.
Well, let me tell you this. Yeah. I had never been in the property in Detroit. I never seen it. I never spoke to my tenant. I never changed a toilet.
Yep.
And I collected that money for 5 years.
Yep.
And I sold it without ever even seeing the property.
Wow.
Bought it, held it for 5 years, sold it, never seen it.
That's amazing. Don't you wish you'd have kept everything you ever bought?
I mean, that one, I needed it to get into a project that I'm working on now. So I just bought some commercial real estate, and I'm doing some other things. So, you said, you get the 4 greenhouses, and you trade it in for a red one.
There's nothing wrong with trading up. And it's not. And look, we commend you for actually. I mean,
so powerful.
Once you did it, though, right, and you got that property, and you can attest and say this, and speaking to all the people that haven't done it yet, even though that might have sounded, wow, that's a little bit risky. Weren't you so happy?
Oh, yeah.
Like you're like, wait a minute, I'm a real estate investor.
I couldn't believe it.
I couldn't
believe it. I still
did
can't believe it. So I just invested in 2 commercial properties in Cleveland, Ohio.
Nice.
Hadn't seen them
Ohio's
before
a good
I invested.
market.
Ohio's a great market, especially for cash, low, low entry, low barrier to entry. But when we're done renovating this property, it's gonna be worth $1 million. So it's like, I'm still scared.
So, but you're doing it anyway.
I'm doing it anyway.
Because you know the power of the asset. If I were to talk to anyone who's considering it and maybe afraid and whatever, when you talk about the power of real estate and let me give you an example. McDonald's is a hamburger company. We know it to be a restaurant or whatever. And Ray Kroc started it. But Ray Kroc would always say that he was in real estate. He was a real estate business. And people may not really understand what he meant.
Right.
He was very smart because let's say he made $1 million in the hamburger business, right? With all the property that he owned and the depreciation that he was able to write off, let's say he was able to write off $1 million in depreciation because of all the buildings that he had. Well, guess what he gets to do with that depreciation and that write-off? He gets to wipe out all that income.
Yeah.
All that, right, and now zero taxes.
Right.
That's one of the powerful things about real estate,
Yes.
and it will build wealth really, really fast. In our community, we need to buy more real estate. Did you know?
And the creation,
after you get done, I'll tell this
the creation of it, though. This is what's so incredible. What we often don't get is this isn't new.
Right.
This goes back 100 years.
So
this goes way back. Rockefeller did it. All the wealthy, so-called the men who built America, all of them invested heavily, 40%, 50% of their portfolio. They make their money in oil, they go out and buy real estate. They make their money in the railroad and steel, they go out and buy real estate.
I come from Wall Street, so I worked on Wall Street for about 12 years.
Wow.
And, you know, there's nothing more real in money than real estate to me now.
100%.
So, like, even my stock portfolio, I'm even side-eyeing, like,
you
you over there, you about to get, you
might
about to
cash
get
in.
liquidated.
we not advocating and telling nobody what to do with their stock, but we made a decision 15 years ago.
Yes.
After we went.
We had that epiphany 15 years ago.
Really?
Look,
So tell me your balance in your portfolio. You're not big on the stock market.
Well, here's the thing. We know people, and we know there are a lot of people who do
very
extremely
well.
And we do. We know day traders, different. But they've put in an intensive amount of study into like the market, the this, the that, the change, and that's what they do.
Right.
And they enjoy it, and they consequently make good money doing it.
Right.
We don't enjoy it that way. We don't trust someone else to do it for us that way. And so when we saw thousands of dollars dropping out of our portfolio, and I asked my broker at the time, or our stock guy at the time, and I went into his office and I'm like, hey, dude, I'm opening up these statements.
And they're not looking
They're not pretty.
And I'm seeing hundos like flying out the window, they're just flying out.
Right.
And I'm like, this isn't good. And I'm asking him, give me an explanation, and his only explanation was, you're young, and you're in this.
You're in for the
it's
long
a
haul.
long haul. I was like, we left.
Said, where's your money?
Yeah, I did. My next question to him was, where was his money? Because he was older than we were at the time. And I'm like, where's your money?
Right.
And he didn't really answer it. And when we got in the car, I told you, I filled out the form. I told him, cash me out. I said, I'm going to invest it. I'm going to do my own
But
investment.
for the very thing that he talked about, looking at that portfolio and watching it decrease, it's of course based on the stock market. You know,
Right.
that came from Wall Street, right? So that's one of the concerns that we have about people's 401k plans, that they're relying on to take them through retirement. If anything crazy happens with the stock market, that 401k plan is going to be affected. And so real estate being a hedge against inflation, people need a house to live in. They need a place to live, right?
You're never going to stop living in a house.
Exactly.
I mean, unless you're going
But the appreciation of it, like we talk all the time, the house that my parents bought back in 1960-something, they paid like $17,000 for it. Well, that same property is now worth over $2 million. Look at the appreciation in real estate. And then your tenant is paying down the mortgage, and you're getting all the equity in the middle, and you're getting cash flow every month, and you're getting tax write-off, right? You pull that equity out, you don't sell it, you pull that equity out, no taxes, go and buy another property.
Pulling your equity out is your money.
Over and over again.
Pulling your
So
equity out.
powerful.
All right, so I love it. I love the money, appreciation, cash flow. How are you guys setting your generations up? Like, of course, we're doing this for us to have a good living now. What do you guys have in place to pass this wealth down to?
It's a good question.
To your children, your grandchildren?
That's a very good question.
Yeah.
And the word says
important.
the word says that a good man leaves an inheritance for his children's children.
His children's children, yes,
Yeah.
it does.
And part of what I think, even when we came together, and Jen, I was extremely passionate about this. When you grow up and you don't have a lot, you get lack. You don't, you see everybody with nice stuff. You don't have it. It's just it does something to you. And now for me, it motivated me. I was like, I don't like poor. It doesn't feel good. I don't like nothing about it. Matter of fact, I hate it. Okay? And as soon as I was old enough to start making moves to say, I'm going to figure out ways to make money, to educate myself, to do whatever I got to do, work hard, if working hard was required, and then take that and just keep leveraging that money, learn more. And the thing was, real estate became the best vehicle because after we did start doing the system, I'm like, this is a good system, and it works, and it's not new. And then the second part of it was, you get so many benefits, you know, that cross over into so many other things. You know, a lot of times we run to the bank and we're like, okay, I want to get a loan. Well, think about it. You get these 2 commercial buildings done, and now let's say, like you said, they're worth $1 million. All you really need is the leverage of pulling out the equity. And as long as you have a tenant, and in a commercial space, triple net, they pay for everything. Taxes, shoveling snow, because it's Cleveland. There's going to be some snow, okay? If the AC break, they fix it. You don't fix it. They take care of their own tenant improvements. They paint. They do everything.
Right.
You own the property, the shell, the building. You get all the benefits of your 37 years depreciation on your commercial property.
39, yeah.
39 years. And you just went and snatched out $300,000. You can go buy something else.
Right.
And it wasn't.
And you can pass it down.
It wasn't taxable because technically it's a loan.
It's not income.
That you borrowed out of your property, and now you benefit from all that, but you didn't sell it. So
Right.
what do you do with it? You protect the asset in a trust or in an established business that your children now get to keep. You still use the money, and you're generating for you, taking care of you now, and you leave it, and you teach them, and they do it.
Yep.
So you never get rid of your
And
property.
they don't have to start over
Right.
from scratch.
So that's
which
the
is what we
generational
see.
piece. So the generational piece for us is building this portfolio
Yeah.
that's managed well, that works properly, that's protected, you know, put in the right type of entity. And now we also educate our children. They become board members. They become part of the process. They can benefit from the process if they input into the process. Don't benefit, no input.
Right. No benefits.
That's
You know?
exactly what we need
And
to
that's
do
how you get them
in
to
our
have
community.
a stake. you know?
Gotcha.
Yeah.
Yeah.
I love
So
it.
that's what we've worked on.
And the sad part
worked
about
on.
it is, I think in our community, we're not even talking investing. We're talking just regular home ownership. Has not changed since the 60s.
Yeah.
Believe it or
Yeah,
not.
yeah, it's tragic.
It's heartbreaking because we're in a position financially, we know how to make money.
Billions, trillions
Trillions
in
Yes.
spending
Speaking
power.
of trillions, when Rod said that people always say, oh, I don't want tenants, toilets, and trash, we're like, you're going to let tenants, toilets, and trash stop you from getting triplexes and treasures and trillions
Yeah.
from real estate.
Yeah.
Can't do it.
Because you literally, if you think about it over generations, they say that the average wealth, most wealth, especially in our community, I think it's less than this, but they said average is like it lasts 1.5 generations. So if you make all this wealth right now,
Yeah, it's got to be
and
gone
you
before my
leave here,
great-grandchildren even get it.
your
Yeah.
kids, which is a generation and a half,
But
which
you can
means
fix
most
that.
likely your children will have actually spent most of it before your grandkids can actually benefit.
All
Now
the hard
that-
work.
So we have to work to put barriers and
Gotta
security
be.
in place
Yes.
against our children.
Yes.
Yeah, and not
gotta protect them against
and,
themselves.
and,
Gotta
not-
protect them
and-
against
and what we're
themselves,
doing is
'cause
protecting
they're,
them from
they're
them.
really first generation. So I told you guys
Yes.
a little bit.
Yes.
I'm first generation, college student, millionaire,
Yeah.
Wow.
real estate investor, all the
Wow.
things,
Yeah,
right?
yeah.
So
Starting
it is
something
very
new.
important for me to,
No doubt.
of course, give my children a different life. But like you say, even think about how I protect them against themselves.
You have to.
100%.
You have to.
Yes,
100
that
and
is
you're gonna
so
do it.
important. Oh, listen, I have trust, and if y'all ain't doing what you got to do,
Yeah.
But I do preach one thing. So my 8-year-old, he's already an entrepreneur. He wrote a
Okay.
book called
That's good.
ABCs for Rich Kids. You guys
Come
make sure y'all
on.
check that out.
That's good.
ABCsforRichKids.com. But I try to teach him that regardless of what job you do, so he wants to
Right.
play football.
Okay.
Regardless of what job you do, you're going to be doing real estate. So he's out on the
Period.
projects with me.
Right.
Yeah.
Right.
Teaching him videography and editing and all the things that we
So
need to run the
good.
business.
Yes.
But everything is earned. earn.
Yes, ma'am.
You're not going to get any of this
ma'am. Good.
until you
That's
earn it.
Awesome.
Yeah, so
Gotta be.
I love what you guys said, though, about
Yeah.
protecting the children against themselves, because they don't know.
They don't.
And we've seen it, even with the Rockefellers, like, they write people out of their trust.
They don't play.
They don't play.
Yes, they will.
They will kick you out of
Yes,
the
they will.
family.
Yes. But you know what, though? But think about it. People see that and they're saying, like, that seems so hard, and, oh, you know.
Protecting a
but that's
legacy.
family. And that. But would it be more important to you that everyone believes that you're so, like, family-oriented, you will let the family do anything and still support them?
Right.
That's
Or
not love.
will it be, love is, I'm not going to let you affect everyone else that's behind
Including
you.
yourself.
You have to be responsible for
So if
that.
you don't get it together, then here's basically what's written. If you don't get it together, you don't get anything.
Yeah.
But I like one individual we met recently, and he said one of the provisions in his trust was, and the way he set things up, is they can draw out whatever amount that they make. If they're making $70,000 a year, he'll give them $70,000 a year.
Wow.
If they make $20,000 a year, you can only draw $20,000 a year. So there's an incentive for you to make more.
For you to make more.
So the more you make,
I like
the
that.
more I would let you pull
Kinda cool,
out.
huh?
I like
And I
that.
said that incentivizes you
Get out
to
and do
do
what you gotta
better.
do.
There you go. You're not
Get
gonna
on
lay
your game.
home.
Because think about it. If I said I go out and hustle and make $400,000,
Yeah.
well, I'm gonna get a match.
Right.
I'm like, because I'm
That's better. That's better than the 401k match that these companies.
Yeah, I mean now that
3%, you know.
Yeah.
I just saw a video on Instagram where a guy worked 20-something years and they talking about they taking a pension away.
Oh.
Yeah.
He was going off, livid, as you
Yeah.
can imagine.
Yeah.
You worked 20 years, you thinking
Yeah.
you got 10 years left to your
Yeah.
pension,
Yeah.
and now the company's canceled the pension.
well, a lot of them are doing that.
Well, tell me how you are
bad.
recession-proofing and all of this, your retirement, because I know
Real estate.
that's something that's what you're thinking
Yeah,
about.
real estate is a hedge against inflation. You notice the
Yeah.
prices of real estate has increased since inflation has been off the chain and they're
Yeah.
printing more money like crazy. Real estate goes right along with it. It's a
Yeah.
hedge.
Yeah.
It's a hedge
Yeah.
against inflation, and that's what we rely on.
One of the I think the key things for us was this: when we realized that, like we won't get too deep in the history, but look, when we came off the gold standard in 1971, and money was no longer really backed by anything, and we can just print dollars.
Yeah.
I mean, if everyone just get a vision of what that really is and what that's doing. I mean, basically, you can just go to Washington D.C. They can just fire up the printing press and print off $100 million. And
It just
circulate
waters
it.
down the value.
So it's devalued the dollar.
Yeah.
And now the only thing that keeps up with inflation and things like that would be gold, silver, real estate, precious metals, things like that, commodities, things that you can oil, but how many people have an oil well?
Right.
How many people have
How do we
a
even
gold
get
mine?
into oil? I literally
Yeah,
was thinking
yeah.
about
you can.
how do we get into
We know
oil.
someone that's actually, and we're not, we would love to be. But I think you have to look at it that way. And so for us, our tool or our choice that's very comfortable for us and could be very easily, like with what you've done, very comfortable for many, is to scale real estate. Scale. And like that, we're not trying to tell you got to be Donald Trump or you got to be any, real estate tycoon that you've seen, maybe that you don't like or like. That do you.
Right.
Okay,
Just do it.
Like Jen said, if you want 5 houses, okay, and your goal is to take those 5 houses, take very good care of them, get very good tenants,
Yeah.
have the tenants pay your mortgage, you get passive income, and let them build your equity, and you say, well, 10 years I'm not working anymore. Well, guess what? In 10 years, you could be sitting on $500,000 in 5 properties that you don't have to sell to get the money.
Right.
I love it.
Exactly.
So that's our vehicle. That's a safe, fairly easy way for even someone on a low level to get in
And so
and build something for
I
themselves.
love that. And what I'm thinking about as you're saying that, because I work with a lot of younger people that are just starting their families and they're planning for like college.
Yeah.
So when I bought my house, I bought it from a man who had bought the house for his children. We live close to a college. And so he bought the house for his children to live in while they were in college.
Yeah.
Right.
They rented all the rooms out to their,
Yeah.
to other college students.
Yeah.
And so they lived for free.
Yeah.
Right.
They also had an income from
Right.
these other,
Yeah.
but then he sold the house
Isn't
and
that
now it was
amazing?
his. But what I was thinking about was, I could buy a property. My son is 2 years old.
Yeah.
Buy a house
I could
for
buy
him.
a property for him now.
Yep.
Yeah.
And then let it build up equity. So
Yeah.
by the time he's 18, 19 years old, ready to go to college, now we
Tuition's
can
paid for.
refinance.
Yeah.
Right.
And tuition is paid for.
That's exactly what we did.
You ain't got to worry about, I got to save it for college and all this.
Y'all want to pay for college? Stop playing.
No, we
love it.
did something that you'll appreciate last week, because we have a mastermind group that we do, and we got mentees that are in there. And so last week we had told them a few weeks back, we said we're going to show you something, because we just want the vision cast for them. We want to like throw something out. So we said we moved to Atlanta when 2012.
2011.
Okay, we moved to Atlanta in
2012,
2011, right around there after the collapse, market collapse. We moved down here, bought a 2.5 acre property out in. First, we lived in Peachtree City, then we bought a 2.5 acre piece of property in Coweta, right outside of Peachtree City in Noonan, and got a great deal on that property. We got owner financing, bought it as an estate, part of an estate sale. We made a deal, brokered the deal, got it, bought it directly from. Loved this guy. He was a dentist, a retired dentist here locally. Had a great relationship with him. He financed it for us, gave us a really great interest rate. It was one of the sweetest deals we got. We got it at a really good price. Now, we bought that property, but we moved on from that and purchased no less than probably 8 to 10 properties during that era right after the collapse. We bought a property in East Point for $1,700.
Wow.
A 2-bedroom, 1-bath house, $1,700.
Wow.
We bought a property over off of Sullivan Drive over there in Southwest Atlanta for $17,000.
Wow.
We bought a property for $4,700.
$25,000.
We bought properties for $25,000, for $32,000. Now, I went out and I pulled up all those HUD ones, and what we wanted to show them was just in 11-year span, we showed them what we paid, and then we took them to Zillow. We said, now I'm gonna go, and we popped up Zillow and said, now, and we know that Zillow typically is a little low.
Perfect.
Right.
But we said we want to give you, we just want to give you a vision.
An idea.
Yeah.
So we
An
popped them
estimate.
up. 170, 210, 240,000.
Wow.
See, these are property. This is
In just
this
a
is
short
11
period.
years. Okay,
Just
In
a
just
decade.
one city.
in one city. That's here. But the point was, we're like, when's the best time to buy real estate? 20 years ago.
Right.
When's the next best time?
Today.
Today.
Absolutely.
So if you'd have bought the properties 10 years ago,
Yeah.
in that case, like we did, I'm like, come on. And you can't figure out which one's better.
Appreciation. You gotta love
And
it.
then you have tenants that if you place them right, and like you did with your property in Detroit, they'll pay you. And you might have some minimal renovations and things like that, or repairs. It's tax deductible.
It's tax deductible.
It's tax deductible.
Right.
Fix it.
Or
So-
you can sell.
Yeah.
Or you can sell, right? So how many assets do you know the government will allow you to depreciate it, but it's appreciating in value?
Yeah.
It's
Right.
going up in value, but they let you write off the depreciation,
Come on.
which means it's going down.
Right.
Or
That's
I
a-
mean,
that's a
it's
wealth-
wear and tear.
That's a wealth
It's like a
strategy.
win-win.
They put it in
It's a
place.
win-win.
And,
For sure.
hey, look,
Yeah.
the elite put it in place, and we all get to use it.
Come on,
Isn't that
jump on
beautiful?
board. Yeah.
So
I love it.
Yeah.
Awesome. So, so right now, I know we said you guys are nearing figuring out what retirement looks like for you. What is your goal for maybe the next 10, 15, 20 years in business and life? What are you looking forward to? And what can we expect from you guys in the future?
Wow. I don't think we'll ever retire.
Okay.
Not
I really don't.
Yeah, you said you
officially,
didn't really believe in retirement.
We don't.
Yeah.
We don't believe
Yeah,
in
so we won't
retirement. I
officially.
think we'll always be striving and growing. I think that's the key to success. That's the key to staying married. That's the key to life and growth. So we'll probably never really retire officially, but we will focus more on training and teaching others.
Yeah, educating.
Because I think we have
Yeah.
to give back now.
Yeah.
I think we have a community of people, our community primarily, that
Mm-hmm.
needs to understand this asset. We don't want to just sit on it and be like, oh, well,
Yeah.
we did ours, and
Yeah,
now
we
you got to
like
figure
the
it
thought
out.
of helping
you know?
and helping and giving back. We like the
Yeah.
thought of blessing people. You're blessed to be a blessing. We like the thought of,
Yeah.
but we do believe that requires a commitment.
Yes.
And we do believe that if you just give people things and you don't make there some commitment on their side or some level of them just buying in, they won't take it seriously. They
Yeah.
won't
Yeah,
really
you
do
can't
with
drag
with
them in.
So we don't want to drag people along. You want people to want it, and you want people to be willing to do the work
Yeah.
because there's work that needs to be done.
Gotcha.
Okay, to educate yourself, because you don't want to become the person that says, well, I don't want toilets and trash. And every time we hear that story, I guarantee you, if you dig a little deeper, you'll find out that a lot of what was caused by them. Okay, they needed to do repairs, they didn't. The roof was leaking, they didn't fix it. They took the rent though. Okay, there's a series of things behind it. You were not doing what you needed to do to protect the asset that you had that would keep paying you
for life.
But you have to be prepared to do the right thing behind your business.
But you know what's interesting? You know, we heard this from, gosh, I can't remember his name now. You'll remind me of it when I say what it is. There's only 4 reasons that make people change. And I want to see if I can remember these. John Maxwell said this.
John Maxwell.
I'm going to give him credit this one time, then we're going to.
Yeah.
But anyway,
After that,
he said there's 4 reasons that people change. So I can remember them. They hurt so much that they have to. They see so much that they're inspired to. They learn so much that they want to, and they're given so much that they're able to.
Right.
Isn't that powerful?
Yeah.
So powerful.
Yeah.
So true.
Oh my gosh.
He's incredible. If you ever see him speak, we went to an event a couple of years ago with him, but he's an incredible speaker.
Absolutely.
Very gifted. Very
Great leader.
Man.
But it's true, because when you're hurting so much, like you were talking about coming from poverty and hurting so much
hurting
that
will
you
make
want,
will make you do something.
That you had to do something.
Oh no,
right?
no, it make I
had a friend once say, people will purchase a pain pill before they purchase a vitamin.
Oh yeah.
If you have a headache, you're gonna get rid of that headache.
Oh yeah.
True.
Oh yeah.
But
Pain
so
will
true.
make you. Pain will move you. That's why sometimes when people do hurt from some mistake, you're like, it's not gonna kill you, but it absolutely will educate you.
Right.
You know, and you got an expensive, painful education.
Yeah.
But whenever that thing comes up again, it's gonna be an immediate no go.
Right.
It's like I'm not doing that. That's not, that doesn't work.
100%.
I love it. So let's bring this thing back full circle. We open talking about you guys purchasing your hotel. What if I wanted to invest in a hotel? What can I expect from like an ROI perspective? And then, let's just wrap up on
Well, it's very interesting
how you're
that you
expanding beyond the hotel.
Yeah, that you asked that question, because that's where we are too right now. We're cranking the numbers, and I think it depends on how much you put into it, just like with any property, how much you invest into the asset and how many people you want to team up with. And this is where we are right now. And we haven't quite gotten our minds wrapped around it to be able to answer your question with a straightforward answer.
We think we know the dollar range in which we're looking,
Yeah.
and we think we know the size. But now it's going to be be on market and some other variables, because hotels are a little,
And then there's
they're a little
full
different.
service all the
Right.
way down to extended stay.
Right.
There's full service, limited service, extended stay, and we know that after COVID, or during the time of COVID, people weren't staying in hotels, but they were staying in the extended stays.
Right.
The extended stays lasted through the pandemic.
So more like economy type.
Right. And so when you see these big glamorous ones, and they look beautiful, and they have restaurants and spas and gyms and all this,
It's a different market.
you're kind of pulled toward, oh, I want one of those. But
Right,
there,
it's
like,
beautiful.
Well,
But
see,
from an investment perspective,
exactly.
which is the
What makes
same
more sense.
reason we
Exactly.
said that we stopped so much saying a number of properties. So you see, it's kind of because somebody, I got 500, I got 1,000. See, you could go and buy a 500-room hotel and be the Atlanta Marquis or one of the hotels, and you drive by and you're like, I own that hotel.
I own that, but I'm not making any money.
but the vacancy or room rate on it, they could only be booking out a quarter of it. You got all that electric bill, all that water, all that staff.
right.
You're only selling
So
a quarter
we
of
wanted
the
to start
rooms.
small.
So our thought
local.
is
So what is
not
small?
to
What
go-
is a small
Well,
hotel?
maybe
look
less
like?
than 100 units.
Yeah, we're
Okay.
probably 100.
100
100
doors.
keys, they call them keys.
100 keys.
Yes.
Or less. And extended stay.
We're looking
Limited
at
staff.
for us, our model, and what we've now concluded for us. Now this might not be for someone else, but extended stay model matches us.
Okay.
Okay, because
And
we
don't they
see
have a
things.
diversity program?
Oh yeah,
Are you guys working through the
Different
diversity
ones,
program?
Different ones do, yeah.
a couple
we
of
are.
them do.
But here's the
Yeah.
other things you have to keep in mind when you're talking about your ROI. So there's different metrics that you got to be aware of. The occupancy rate is one. Like because it has 100 rooms doesn't mean they're all occupied.
Yeah.
So let's say it's only 60% occupied. And then you have to know the ADR, which is your average daily rate. What is the average daily rate for this hotel? Is it $80? Is it $110? What is it? And you have to figure that out. Once you know the occupancy rate, your average daily rate, and how much money you put in, you can figure out what you're going to make every day.
Right.
And then you have to understand how much money you put in it, so you know your cash on cash return, just like any real estate investment. So there's a lot of different components that you have to slice up. But once you do, I think it can be extremely, extremely profitable.
Yeah.
If you get the right model.
Yeah, so we've got our eyes on some that we and here's what we've traditionally been able to do, and it's really just been a culmination of all the experience we've had across the board. We look at stuff a lot differently. Like when we evaluate stuff, like we shared with you going to this hotel, a lot of people, I mean, oh, it's nice. Let's look at the pool. Let's look. We want to see.
I really don't want to.
We wanted to see.
Can I see the budget?
Guts.
Yeah. Okay.
See, what's your,
exactly. Show me the numbers. That's right.
Yeah.
What's your staffing these days?
What's your
crazy,
What's your
right?
fees for exterminating? How much? How much are your supplies?
They're expensive.
How much toilet paper do you use?
Right.
So I'm like, okay, where do you keep it?
Right.
We're like, is that the
Who are
storage?
your suppliers?
Right. And could you have gotten this carpet a little bit cheaper? Like, where'd you get it from? How much did you pay for it?
So one angle that we have that happens to be an absolute distinct advantage for us, it always has, just can never forget, I'm a general contractor.
Mm-hmm.
So when most people say, oh, that construction cost was just, what I'm saying is, oh, I got guys.
Mm-hmm.
Oh no, I got people for that.
Right.
Oh, I will send them down here from
Hello.
Pennsylvania,
To Florida.
Virginia. Oh yes, I will, and I'll put them up in the hotel. And they will stay
Have
there.
room and board.
Because you can get ripped off by the contractors, right?
yeah.
We have a change order.
I just had to fire my contractor twice.
There you go.
Yeah.
There you go. Exactly.
So for us, our angle is so much different.
Yeah, I love
And-
it.
So
and we
much
control-
so, when we were at this last meeting and the guy said he was going to add rooms to the top,
Right.
the first thing Rod and I thought was, are the footings going to support that new height that you're going to add to
And
that
the
footing?
weight.
And the weight, yeah. Is
It's
it going to
engineering
add,
and design
just
issues
talk
you
to the
gotta-
city, you
yeah,
know? So
yeah.
we dig deep into stuff. We're
Yeah.
very much like you in that way. We analyze and we dig deep and we crank numbers to see if we're going to be profitable. We don't just jump into anything because it looks glamorous.
I love it.
You know what I mean?
Well, yeah,
It's
I mean, with the 2-year due diligence,
you have to
I'm
do
sure
your due
it's going to
diligence.
be
Yes.
an
Oh yeah,
amazing
when we
opportunity for
come
you
out, I
guys.
think
Amen.
when we left yesterday for the execs and folks that we were talking to, and they were like, because some people there want to, again, they walk in, oh, I own this, and a couple of them that were with us, there were some other people, oh, I own one of these, and we're sitting there thinking to ourselves, I was like, and then right behind it, we hear them say, we have challenges with the staff, and oh, the food spoilage. So they're all chatting, and we're sitting here listening,
Right.
but you want to tell us that
Right.
Right.
When we go in, our story will be different.
Right.
We'll take the Econo Lodge.
We didn't
I
have
love
that
it.
challenge.
Or the Motel
No, we don't have spoon
6.
spoilage because we don't do food and beverage. No, we don't have this.
We
because
rent to
we didn't
truckers
do
that come through every day
Yeah.
and they need a
we
place
do
to
extended stay. We
Right.
rent to people from the power company when there's a storm.
Traveling
and
nurses that stay for 3 months and move on.
So
I love
we have
it.
a different angle.
Yeah.
I love it.
That's all. And that's just
Well,
our angle. That's all.
I love that. Well, guys, meet the future hoteliers. Is that how we say it?
It is,
Hoteliers,
hoteliers.
Yes,
Yeah.
meet the future hoteliers. I look forward to following you guys'
Thank
journey,
you.
being inspired by you, and maybe even reaching out for some coaching.
yeah.
All right.
You never
We
have
got
too
you.
much.
We got you.
But please let the people know where they can follow you, maybe what you guys have going on in the future, how they can tap in with what you have going on.
Well, we always have something going on.
Yeah.
But the most consistent thing we have going on is that every month we do a challenge. It's called the 5-Day Challenge, which is very similar to just a workshop, right? It's called the Real Estate to Riches 5-Day Challenge. We have it every month. You can go on to rodandjen.info and find any information you need to know about us there. We have a YouTube channel, which is Rod and Jen Spratley. You can follow us there. We're always dropping good nuggets there. We're always so happy when someone subscribes. You're like, oh, we got a new subscriber. So we'd love to have
We're
you.
old school. That's so exciting to us. We're like, some people subscribe.
But yeah, we're always available. We're also on Instagram, Rod Spratley, or is it Rodney Spratley on Instagram?
One of those.
And
They'll
then
find us.
it's Rodney Spratley on
Yeah.
Instagram, and I'm JenSpratley.coach on Instagram.
Yeah.
But together we have Money and Marriage on Instagram. We talk about marriage
So we
and
do a
money.
little bit of that.
Yeah.
But if you put our names in, we'll come up, and then when you get on any of the platforms, there's always something talking
Rod
about
and
what we're
Jen
doing.
Spratley. You can find
Yeah.
us anywhere.
Yes.
So we look forward
I love
to
it. Well, Rod and Jen, I thank you guys so much for coming
Yes,
up and
you're
bless us
welcome.
today.
Thank
Hopefully you guys have found some inspiration in this episode. I'm looking forward to growing my real estate portfolio, so you guys
Absolutely.
definitely inspired me.
Nice.
So make sure that you follow Rod and Jen
Yes.
on Instagram, follow them on YouTube, and more importantly, make sure you like and subscribe this video and to our channel, and we'll see you guys next week. Peace. Thank you for watching this week's episode of Black Wealth Weekly. I'm your host, Shaniqua Nicole, and I hope to see you next week. Make sure you hit that subscribe button, turn on them notifications, and head to blackwealthweekly.com where you can read all the new episodes of These Entrepreneurs and so many others.